Let's get a read on all of this with Dan Sear, the financial expert and national radio host. We've got Scott Martin joining us of Kingview Asset Management and our own Jerry Willis. So, Dan, your take on this rally and whether it lasts. I mean, we're comfortably over 20,000. What if we don't finish over that? I mean, we've done that kind of thing before with these 1,000-point climbs. What do you think?
I think it lasts, Neil. I feel really good about what is going on and why it's being driven. I think it's very real, unlike rallies we've seen in the past. I think it could pull back, certainly. Listen, stocks were overvalued the day before the election. They're still somewhat overvalued. The difference is we've got some hope and change. I hate to use those words, but we have some hope and change in the administration and what we're seeing in the economy. And I think we have so much enthusiasm just because we are seeing action. We are actually seeing a president that is doing things, just not talking about doing things. And I think it's almost to the point where nobody really cares what he's doing. They're just glad to see something being done, and it gives an awful lot of confidence moving forward. So I think it's here to stay. If we get a pullback, I'm not concerned. I do think we're going to continue to see this enthusiasm.
You know, Scott, what makes it interesting is that enthusiasm was worldwide in nature going into the trading day today, as if they smelt something in the coffee. You know, France, Germany, each up more than 1%. Japan was up 1.4%. The Hang Seng and Hong Kong, you know, up about 0.5%. So again, the Eastern fears, for example, that this was going to be a protectionist administration, I don't know. Maybe they're sorting that out. Maybe they're still anxious about that. But what do you think?
Yeah, definitely some extra caffeine in the coffee the last couple days, Neil. Donald Trump, like him or hate him, which I know some people out there certainly do both or follow both sides there, he's done more for this economy and the markets in the first 2 days in the administration than, say, Obama did in the last 2 years. So that's what everybody's excited about. You know, Dan mentioned some cool words there, hope and change. I'm going to use those words again, but they actually mean something now. They were backed by action. They're not just words anymore. They're things that Trump is proving to actually be real. You
know, Jerry, when we look at this kind of thing, it's as if we forgot the discussion last week of what some deemed to be, in his inaugural address, a very America first, almost protectionist address to the country. And that's obviously what led to a lot of the foreign market concerns. Now it seems as if people, and who knows who's right on this, but they're reassessing that and thinking, well, you know, maybe that's not such a bad thing. What do you think?
Well, I guess there is a reassessment going on, and what people are deciding is that Donald Trump is a man who negotiates. You know, we had the statements on tax where instead of dropping corporate tax rates to 15%, which is what he said all along, the other day he said 15 to 20%, a concession to Republicans. Look, I believe this is a Trump rally, and here's what's going on. American companies out there, they're hearing what they want to hear. They're hearing what they like to hear. Lower taxes, less regulation. 10 days after the election, the Dow went through 19,000. 42 days after the election, now down through 20,000. I just want to add one more thing. This isn't just the Dow. We talk about the Dow, it's just 30 stocks, right? It's not really the whole market, but the S&P 500 and the NASDAQ as well, all three of those setting records. That is a positive, bullish signal. If you're one of those folks out there, you're saving for retirement, and you've had it inside yourself to stay in the market, pat yourself on the back. Long-term investing works.
You know, what do you tell investors at this level, Dan, who look at this, see the Dow over 20,000, see the S&P and the NASDAQ racing along, see mid-caps really racing along, the small guys, the small-cap stocks really racing along it. What do you tell investors who say, all right, I've been out of this market, but I want to dive in today? What do you tell them?
Well, I'm telling everybody you have to get in. You can dollar cost average in if you'd like. That's not a bad idea, but I think you have to be in the market. And I think what was just said, it's a broad-based rally. And I believe it's real. It's here to stay, and I think you've got to get in. You have to be in this market. And those that I was saying that the day after the election, and I believe it's as true today, we've got to start getting into this market and not be concerned if we start to see a little bit of a pullback from here. It's okay. We have an administration, we have fiscal policy that's going to be coming out of Washington, something we haven't seen in 10 years. It's going to be okay. It's going to come back to get in and stay in.
All right, Scott, we always do this when the market's even running down, down, down. We look at the flip side and what looks good. When the market's running up like this, we look at the flip side and what could be problematic. Here are the things that could be problematic. Interest rates backing up. Now, this go around, and you were one of the first to point this out to me, sometimes interest rates backing up is a good thing. It reflects an economy that many perceive to be getting stronger. That's net positive. What if they relentlessly keep backing up? That if we're at a 2.5% yield on a 10-year and it gets up to 3.5, back to its more historical norm, then what?
Yeah, and I don't think they will, but that certainly is a fear, because when interest rates go up, bond prices go down, and so you get a price depreciation there. But I'll tell you what's funny is about interest rates here, Neil. Them being about 2.5% feels like it's high, but it's really not historically, as you point out, especially if we're going to get this 4 or 5% growth. So that's actually a great thing that we're seeing interest rates respond. If we saw interest rates going down in light of this market rally, I would be very concerned that it's not for real. Rates going the other direction up, in this case, is a good sign that this market is back as far as equities.
Can I just piggyback on Scott here? Look, there's a lot of people out there going to be happy to see higher interest rates.
That's right.
Senior citizens, people who have gotten killed by the Federal Reserve keeping rates so low. These folks are happy to see this, and they would like some more. Thank you very much.
I saw one bank bragging about a 1% CD. Bragging about 1% CD. I guess it's the times we live in. Guys, thank you all.